Let's begin with a truth most traders spend years avoiding. The charts aren't your enemy. The market isn't your enemy. The enemy is the invisible force inside you, the emotional storm that hijacks your rational mind and turns a simple buy and sell decision into a chaotic psychological battlefield. Trading is sold as a logical game of probabilities, but the real game is played inside your nervous system. Ask any seasoned trader who's been through the fires of euphoria, fear, revenge trades, sleepless nights, and the haunting regret of, "I should have exited sooner." And they'll tell you, this game is emotional, and it's brutal. It starts with dopamine, the neurochemical that drives anticipation, reward-seeking, and quick-hit gratification. Humans are wired to chase pleasure, and the markets deliver a potent cocktail of uncertainty and possibility that makes your brain light up like a casino. You place a trade, and before you even know the outcome, your dopamine system is activated. You're already fantasizing about profit. Whether the trade wins or loses, the emotional cycle spins, and most traders get hooked not on profit, but on possibility. That's the roller coaster. In the early stages, trading feels magical. You find a strategy you like, maybe it's technical analysis, maybe it's price action, maybe it's news trading, and you try it with that spark of naive confidence. The first winning streak feels like destiny. Your chest expands, your thoughts speed up. I knew it. I'm built for this. I'm different. Dopamine floods your system, reinforcing the behavior. The emotional high is intoxicating. Without realizing it, you're no longer trading to make money. You're trading to feel something. Then the losing streak hits. The same charts that looked like opportunity now feel like traps. Every candle feels personal. Your brain shifts from dopamine-driven excitement to cortisol-driven stress. Your fight-or-flight system activates. You stare at the screen waiting for a sign, any sign, to justify staying in or getting out. The loss feels like a reflection of your personal worth, not just your account. And suddenly, this thing you thought was a financial endeavor becomes emotional warfare. This is the core of the roller coaster, cyclic emotional reinforcement. Wins trigger dopamine spikes, losses trigger emotional pain, and both reinforce impulsive behavior. You swing from euphoria to panic, certainty to doubt, confidence to despair. This loop keeps traders stuck because the emotional system learns much faster than the logical mind. Your brain cares about survival and reward, not risk management and consistency. Cognitive biases trap you deeper. Confirmation bias pushes you to seek information that validates your position even when it's collapsing. The sunk cost fallacy convinces you to hold just a little longer so your loss can become a win. Overconfidence bias tricks you after one big win into thinking you've mastered the game. Every emotional bias is a doorway into deeper volatility, not in the market, but within yourself. Look at the history of successful entrepreneurs. Howard Schultz, Steve Jobs, Sarah Blakely. They built empires not through luck, but through emotional discipline. They learned how to regulate fear, doubt, and rejection. Their businesses required strategic decision-making through uncertainty, just like trading. It wasn't intelligence that set them apart. It was emotional durability. Jobs wasn't the best engineer. Schultz wasn't the best barista. But both could tolerate emotional volatility without breaking down in panic. In other words, emotional regulation is a skill, and winners are people who build it intentionally. The irony of trading is that most traders think they need more knowledge, more indicators, more analysis. But the first wall they hit is psychological, not technical. You can have the best strategy in the world, but if your emotional system is unstable, you will sabotage yourself. You'll exit too early, enter too late. You'll increase position size after a win. You'll revenge trade after a loss. You'll act like a genius on Monday and a gambler on Tuesday. The inconsistency isn't caused by the market. It's caused by neurochemistry. Let's go deeper into dopamine because dopamine is the invisible hand that pulls most traders back onto the roller coaster. Dopamine is not pleasure, it's anticipation. The feeling of this could be the trade is more addictive than the profit itself. Casinos rely on this. Slot machines are engineered to keep you in a loop of anticipation. Trading replicates the same psychological structure. A chart is just a digital slot machine for most people. You sit there watching prices go up and down, waiting for your turn to press the button. When you open a position, you activate the reward system. The moment you close the trade, your brain resets, craving the next hit. This is why traders overtrade. This is why they get stuck on screens for hours, chasing setups that aren't even part of their system. They aren't hunting good trades. They're hunting emotional stimulation. And the moment that stimulus fades, they look for another one, rationalizing decisions with words like, "I see a setup," when in reality, it's just dopamine pulling their strings. Entrepreneurship teaches the same lesson. The best founders don't jump at every shiny object. They learn to regulate emotional impulses. Jeff Bezos built Amazon by repeatedly delaying gratification, focusing long-term instead of chasing quick thrill. Warren Buffett made billions by being boring. These people know how to step off the roller coaster. They learned that consistency comes from emotional neutrality, not excitement. But traders remain trapped because excitement feels good. And as long as excitement is the goal, consistency will always be out of reach. Consistency is emotionally boring, and that's why it's so difficult. It requires discipline, stillness, repetition, and the ability to execute without emotional attachment. Most traders don't fail because they lack intelligence. They fail because they can't stand the emotional boredom of true discipline. They crave the highs and escape the lows, never realizing both are the trap. The emotional roller coaster is predictable. It begins with hope, the intoxicating belief that this trade will change everything. Then comes tension, the uncertainty while price moves. Then euphoria if it wins. Then fear if it reverses. Then regret. Then anger. Then revenge. Then shame. The cycle repeats. The emotional energy builds into a loop powerful enough to drain your mental health, sleep, relationships, and sense of self-worth. Many traders think they're addicted to profit, but they're addicted to emotional volatility. The market becomes a stage where subconscious patterns play out. Tell a trader to walk away after a loss and they'll say, "I'm fine." But inside, their adrenaline is spiking, their thoughts speed up, and their nervous system is primed for impulsive action. They need to win not just to recover their account, but to recover their identity. Loss feels like personal failure. This is why people blow accounts, not because they lack knowledge, but because they're emotionally hijacked. Truly stepping off the roller coaster begins with awareness. You must understand that your brain is running the show. You are not thinking, you're reacting. The first step is to build a gap between impulse and action. That gap is where mastery lives. Most traders never create that gap. They sit glued to their screen, emotionally fused with every candle. Their sense of self becomes tied to the outcome of each trade. Up means I'm smart, down means I'm stupid. But this identity fusion is the heart of the emotional roller coaster. You can't find consistency when your self-worth is bouncing with every pip. The market doesn't care about you. It doesn't reward effort, time spent, or emotional investment. It only reflects probabilities. Yet psychology convinces you that your feelings matter. They don't, not here. The market is a mirror, not a judge. And the only thing it reflects is your behavior. Let's revisit dopamine, because it plays a deeper role. Dopamine thrives on unpredictability. When outcomes are uncertain, your neural pathways light up more intensely. The brain is designed to pay more attention to variable outcomes than predictable ones. It's a survival mechanism. When early humans hunted, success wasn't guaranteed. The uncertainty made the pursuit rewarding. The brain evolved to push us toward uncertain opportunities. Trading hijacks this mechanism. The market is uncertain by design. Every moment feels like opportunity. Every candle could be the one. Even when you're losing, your brain keeps saying, try again. Not because you love trading, but because your dopamine system is wired to chase uncertainty. This explains why traders often feel more alive while losing than while sitting still waiting. Waiting feels dead. It's emotionally flat. But losing, especially near-miss losses, stimulates the anticipating mind. Dopamine pushes you to re-enter. Just one more, it whispers. This is the same logic that drives gamblers to keep betting. It's not ignorance, it's neurobiology. Yet entrepreneurship offers a healthier version of uncertainty. Successful entrepreneurs embrace uncertainty but detach emotionally. Take Elon Musk. He launched rockets knowing they could explode. Steve Jobs released products knowing they could fail. They accepted uncertainty rationally, not emotionally. They were driven not by thrill, but by vision. The key difference is intention. Traders must learn to shift from thrill-seeking intention to execution intention. One is emotional. The other is strategic. Most traders never make that shift. They think success means predicting the market. But prediction is just fantasy dressed as strategy. Real traders operate through process, plan, execute, review. They don't chase excitement. They chase consistency. Consistency is the emotional opposite of thrill. It's quiet. It's structured. It's almost meditative, and that's why so few people can do it. Our brains aren't naturally wired to seek neutrality. We seek stimulation. We want to feel alive. This is where the emotional battle is fought, within your nervous system. What makes this battle harder is how the brain processes gains versus losses. Behavioral finance has proven that humans feel losses about twice as intensely as gains of the same size. So even if your strategy is profitable, your emotional system will magnify the pain of losing trades. You could be up overall but still feel like a failure. That emotional distortion pushes traders into chaos. They abandon systems. They force trades. They close winners early to avoid emotional discomfort. They let losers run because accepting loss is emotionally painful. And then they wonder why their results look like a roller coaster. The real problem isn't the system. It's emotional intolerance. Most traders can't tolerate the emotional discomfort of uncertainty, of being wrong, of waiting, of discipline. So they act out impulsively. And impulsive action turns probability into chaos. This is how the emotional roller coaster becomes a prison. Let's walk through a real-life progression. A new trader enters the market. They win early. Dopamine spikes, confidence swells. They start increasing position size without understanding risk. Eventually, the market turns. They lose. Panic. I need to get it back. They open a new trade immediately. Another loss. Their nervous system is overloaded. They stop thinking. They start reacting. Rationality collapses. They blow a portion of their account. Shame. I'm not good at this. They quit, but the emotional memory remains. Months later, they return. The cycle repeats. Sound familiar? It should. This is the default psychological arc of 90% of traders. Now let's look at another version. A professional trader enters the market. They follow a plan. They take trades according to predefined rules. They accept risk. They exit when their rules say to exit, not when their emotions say so. A loss appears. They log it. They step away. No revenge. No emotional negotiation. Why? Because their identity isn't tied to outcome. They don't need the win to feel competent. They know one trade means nothing. Their emotional system has been trained to withstand uncertainty. This difference defines the winners. Not talent, not intelligence, not luck, but emotional discipline. Even successful entrepreneurs practice this. Look at Sarah Blakely, founder of Spanx. She became a billionaire by reframing failure. Her father used to ask her weekly, "What did you fail at this week?" Failure was expected, not feared. That mindset made her emotionally resilient. She could approach risk without emotional panic. That's the same emotional muscle traders must build. Not more indicators, more tolerance. Now let's get into 3 practical strategies to build emotional consistency. These aren't theoretical. They're proven psychological tools that top performers use in trading, business, and high-pressure domains. The first strategy is structured decision-making. When you create a predefined system, entry, exit, risk, and management, you remove emotion from decision points. The brain hates uncertainty. Structure reduces uncertainty. That structure becomes an emotional shield. You're no longer improvising. You're executing. The second strategy is state management. Your emotional state determines the quality of your behavior. If your nervous system is dysregulated, anxious, excited, stressed, you will make poor decisions. The goal is emotional neutrality. Techniques such as breath work, timeouts after trades, and journaling regulate the nervous system. You need a calm baseline to execute rationally. Professional athletes do this. They don't perform emotional. They perform regulated. The third strategy is delayed reinforcement. You must retrain your brain to value consistency over excitement. Instead of rewarding yourself for wins, reward yourself for following your plan. Process, not result. This rewires your dopamine system. You no longer chase emotional thrill. You chase discipline. Over time, the emotional roller coaster flattens. The highs are calmer. The lows are softer. You gain stability. But here's the truth. These strategies only work if you commit. Most traders won't because they secretly love the highs. They say they want consistency, but they chase chaos. If you want to step off the roller coaster, you must choose boredom. Discipline is boring. Routine is boring. But wealth is quiet. Only gamblers need noise. Traders need stillness. This is the inner transformation, shifting from emotional thrill seeker to disciplined executor. It's the same transformation every successful entrepreneur makes. They move from excitement to boredom, from adrenaline to systems. When Jeff Bezos focused on long-term customer value instead of short-term growth, analysts laughed, but he wasn't playing for excitement. He was playing for consistency, and consistency compounds. The emotional roller coaster ends when your behavior stops reacting to emotion, when you detach identity from results, when you let the market do what it does while you do what you do. Execute. But here's the paradox. Stepping off the roller coaster doesn't mean removing emotion. It means mastering it. You're not trying to be a robot. You're trying to be a stable human. Emotion is data. Fear tells you something. Excitement tells you something. The problem isn't emotion. The problem is identification. You feel fear, but you are not fear. You feel excitement, but you are not excitement. When emotions stop driving your decisions, they become tools, not threats. This is emotional literacy, knowing what you feel, why you feel it, and how to respond rather than react. Most traders never build this literacy. They repress emotion or drown in it. They pretend they're calm while their palms sweat and their hearts race. They tell themselves, I'm disciplined, while every click is emotional escape. But emotional awareness is the gateway to emotional control. You can't control what you can't see. You can't neutralize what you deny. The roller coaster continues because traders refuse to sit with emotional discomfort. They want the market to relieve them. They think, if this trade hits TP, I'll feel better. But that means your emotional state is dependent on external events. That's slavery. You hand your psychological stability to random price fluctuations. Now the charts tell you how to feel. The market becomes your emotional master. To step off, you must reclaim control. Your emotional state must be internally regulated, meaning the chart does what it does and you remain centered. Up or down, you are grounded. Your self-worth doesn't move with price. Your nervous system remains stable. Let's look deeper into why the emotional roller coaster is so strong. The brain's reward circuitry combines dopamine with memory. When you win a big trade, your brain anchors that moment. The emotional high becomes a reference point. Now every future trade is measured against that high, and because the brain adapts quickly, It takes more and more stimulation to create the same emotional intensity. Just like addiction, tolerance builds. $100 win stops feeling good. You need $500 to feel the same. Then $1,000, then more. Your trading size increases, not because it's logical, but because it's necessary to get emotional payoff. Risk creeps upward. Rationality dies. And eventually, the account implodes. This is why emotional highs are dangerous. They set an internal standard that is unsustainable. The market becomes your drug. The screen becomes your dealer. And you keep coming back for one more hit. Entrepreneurs face similar patterns. When founders chase the emotional high of praise, they make reckless decisions. When they chase validation instead of value, the business collapses. The best founders focus on process. They treat praise and criticism the same, neutral data. That neutrality is power. So how do you build neutrality as a trader? You build systems for your mind, just like you build systems for your trades. You practice emotional repetition. You expose yourself to uncertainty in controlled ways. You reflect, journal, detach, refine. Over time, the emotional spikes flatten. The extreme highs and lows fade. You find equilibrium. Think of elite military operators. They face uncertainty under life-threatening conditions. But they are calm because they've trained their nervous system through repetition and controlled intensity. Trading is much less dangerous, but psychologically it mimics threat. Every loss feels like danger. Every gain feels like relief. To step off the roller coaster, you must train like a professional, not react like an amateur. One of the most effective tools for this is the post-trade review. After each trade, you evaluate not just outcome, but emotional state. Did you follow your plan? Did you hesitate? Did you chase? Did you size appropriately? By doing this repeatedly, you shift your identity from outcome-focused to process-focused. Over time, the brain learns that consistency, not excitement, is rewarded. Another important element is emotional exposure. Many traders avoid looking at their losses, not on the chart, but internally. They refuse to feel the discomfort fully. But avoidance strengthens emotional charge. When you sit with loss, when you breathe into discomfort, when you journal honestly about fear and greed, the emotional power dissolves. Awareness reduces impulse. Let's explore something deeper. Why traders sabotage themselves. It's not lack of skill. It's subconscious programming. Many people carry narratives like, I'm not good enough, or I need to win to feel worthy, or I can't tolerate being wrong. Trading triggers these wounds. Every loss becomes personal. Every win becomes validation. But trading isn't designed to validate you. It's designed to test you. When old narratives run the show, you'll subconsciously sabotage success to prove them true. If you secretly believe you're undeserving, you'll find ways to give your profits back. A trader's strategy is never the problem. The trader's identity is. If your subconscious believes you're a gambler, you'll gamble. If it believes you're reckless, you'll self-destruct. If it believes you're disciplined, you'll act accordingly. Identity drives behavior. Behavior drives outcome. To step off the roller coaster, identity must shift from I trade to feel something to I trade to execute a process. Identity shift comes from repetition, environment, and emotional awareness. Surround yourself with disciplined traders. You'll behave differently. Study your emotional patterns. You'll act consciously. Build structure. You'll become stable. Let's revisit our 3 strategies in more depth. The first strategy, structured decision-making. This is more than just a trading plan. It's a behavioral container. You define not only entries and exits, but emotional triggers. For example, if you feel anxious before entering a trade, you walk away. If you lose 2 trades in a row, you pause for the day. Structure isn't about restriction. It's about safety. It keeps you from improvising when emotions rise. Improvisation is creativity in art, but death in trading. The second strategy, state management. Your mind follows your body. If your breathing is shallow, your decisions will be reactive. If your body is tense, your judgment will narrow. The nervous system is the foundation of rationality. Techniques like slow breathing, scheduled breaks, meditation, exercise, these aren't spiritual fluff. They are neurological tools. They regulate the autonomic nervous system. When you're regulated, you trade with clarity. When dysregulated, you trade from fear or thrill. State management must be built into your routine, not used as rescue. The third strategy, delayed reinforcement. This is psychological rewiring. Every time you follow your plan, regardless of outcome, you reward yourself. The reward can be emotional, verbal, or physical. You tell your brain, this is success. You shift your dopamine response away from winning and toward discipline. Over time, discipline becomes satisfying. The emotional roller coaster slows. You feel calm while waiting. You feel neutral while losing. You feel steady while winning. The market no longer controls you. You control you. These three strategies create a foundation. But beneath them is something deeper. Acceptance. You must accept uncertainty. Accept loss. Accept imperfection. Resistance amplifies emotion. Acceptance neutralizes it. When you accept that losses are part of the process, they stop hurting. When you accept you can't control outcomes, stress dissolves. Acceptance allows clarity. Trading becomes simple. Follow your plan. Accept results. Review, improve. That's it. The roller coaster only exists when you resist reality. When you demand certainty from an uncertain game. When you demand perfection from an imperfect world. Let go and the ride stops. There is one more layer, and it's the one most traders ignore. Emotional purpose. Why are you trading? Most people never ask. They assume the goal is money. But if money were the only goal, they would choose a simpler path. Trading is difficult, uncertain, emotionally volatile. Yet people stay because, on some level, it fulfills an emotional need. Maybe it gives you a sense of control. Maybe it gives you excitement. Maybe it gives you identity. I'm a trader. Maybe it gives you hope. None of these are wrong. But if you don't acknowledge them, they will control you. When you're unaware of your emotional purpose, you confuse emotional needs with trading decisions. You hold a losing trade because losing threatens your identity. You take a risky position because the thrill fills a void. You ignore your stop loss because uncertainty is painful. But when you recognize the emotional purpose, you can separate it from your trading process. You can stop using the market to feed emotional hunger. This is liberation. It's similar to entrepreneurship. Many founders start a business to feel significant or prove something to themselves or others. When that emotional purpose stays hidden, decisions become irrational. They make big moves for ego, not strategy. But when they recognize the emotional purpose, I'm building this to solve a problem, not I'm building this to be admired, behavior changes. They become strategic, calm, effective. Trading demands the same honesty. So ask yourself, why do you trade? Sit with the uncomfortable answers. You might discover trading isn't about money at all. It's about emotion. And once you see this clearly, you can begin to reclaim power. With clarity, the emotional roller coaster loses momentum. Now let's explore what life looks like after stepping off the roller coaster. At first it feels strange. The absence of emotional chaos can feel empty. You might feel bored. That boredom is withdrawal, the nervous system adjusting to stability. But soon boredom feels like peace. Calm becomes enjoyable. Your mind opens. You start noticing details. You trade less but win more. You feel grounded even during drawdowns. You see opportunities with clear eyes. You execute with steady hands. And your account begins to reflect emotional maturity. You become an investor in probability, not emotion. One of the most beautiful changes is in your relationship with loss. Loss no longer feels threatening. It feels informative. It becomes feedback. You stop fighting the market because you realize the market is neutral. It's not punishing you. It's testing consistency. When you stop taking loss personally, the emotional swings flatten. Winners think in sequences, not events. One loss means nothing. One win means nothing. What matters is the long arc of disciplined action. That's how entrepreneurs build wealth. Step after step. Consistency over intensity. Warren Buffett doesn't care about today's stock price. He cares about the long-term behavior of his system. His identity is not tied to outcome. It's tied to process. He is consistent because he is indifferent to emotional noise. That's your target. Now let's address a common fear. If I remove emotion, will trading become mechanical and dull? Yes, and that's the point. Your trading should be dull. The excitement you seek should come from life, not charts. Your purpose in trading is to create financial freedom so you can experience life more fully, not so you can chain yourself to a screen chasing feelings. When trading becomes dull, it becomes profitable. The emotional roller coaster is flashy but destructive. The calm is boring but sustainable. The process is simple but not easy. You must practice. You must be intentional. You must train emotional endurance like a muscle, but it's possible. Thousands of traders have done it. The difference between them and the masses isn't intellect. It's emotional transformation. The science is clear. Behavior shapes identity. Identity shapes outcome. Start by behaving like the trader you want to become. Do the boring things. Journaling, reviewing, following your plan, accepting losses, regulating state. Over time, this behavior becomes identity. You stop acting. You become. And once you become, the emotional roller coaster fades. You stop chasing. You stop reacting. You stop fighting. You start executing. You start trusting. You start growing. And that's when trading becomes real. Not a casino, not an emotional battlefield, but a path of mastery. Let's revisit our 3 strategies and see how they integrate into a complete transformation. Structured decision-making gives you clarity. When your decisions are defined in advance, emotions lose leverage. State management gives you stability. When your nervous system is calm, your thinking stays sharp. Delayed reinforcement reshapes motivation. When you reward discipline instead of excitement, your dopamine system aligns with consistency. Together, they create a triad of emotional neutrality. Combine these with journaling, review, and identity awareness, and you have a long-term framework for consistency. This is the roadmap to getting off the roller coaster. But let's go deeper. What does stepping off actually feel like in real time? Imagine entering a trade. There is no rush, no thrill. You see the setup. You execute. Your heart stays calm. You know your risk. You know your target. You accept both. If the trade moves against you, you breathe. You don't negotiate with your stop loss. You don't panic. You observe. When your stop is hit, you log the trade and move on. No judgment. No self-attack. If the trade wins, you don't celebrate wildly. You log it. You move on. Your emotional state is unchanged by outcome. You feel steady, anchored. That steadiness becomes your superpower. Now, instead of being tossed around by price, you ride above it. You become observer, not participant. Detached, not numb. Present, not reactive. The market becomes information, not identity. The emotional energy you once spent chasing thrill now goes toward learning. Patterns become clearer. Structure feels natural. Patience becomes strength. You don't need trades. You choose them. You trade less, but each trade means more because it aligns with your process. This is mastery. The emotional roller coaster is seductive. It promises excitement, identity, meaning. But the cost is high. Inconsistency, stress, loss, self-doubt. The path off the roller coaster is quieter, but it leads to peace, consistency, and growth. Every successful entrepreneur learns this. They start with excitement, then chaos teaches them discipline. They stop chasing the thrill of possibility and focus on execution. They shift from emotional to strategic. That shift is where success begins. Trading is the same. At first, thrill pulls you in. Loss slaps you. Chaos confuses you. But if you stay long enough to face truth, you realize the game is internal. The battlefield is your nervous system. The enemy is unregulated emotion. The weapon is awareness, discipline, and process. The victory is neutrality. When you step off the roller coaster, you reclaim power. You stop being a victim of impulse. You stop being controlled by charts. You break the addiction. You trade from strength. You trade from clarity. And then you grow, not just as a trader, but as a person. Because emotional mastery in trading becomes emotional mastery in life. You become calmer with your family, more patient in conflict, more present in conversations, more intentional with decisions. Trading becomes not just a financial journey, but a psychological evolution. This is the hidden gift. Trading forces you to meet yourself. The version of you who craves thrill. The version who fears loss. The version who avoids discomfort. The version who sabotages success. When you see these versions clearly, you gain choice. You can evolve. And that evolution is worth more than money. Because money comes and goes, but self-mastery stays. So now we return to the question, how do you get off the emotional roller coaster of trading? You build structure to reduce chaos. You regulate state to reduce reactivity. You reward discipline to reshape motivation. You shift identity to anchor consistency. You practice acceptance to reduce resistance. And finally, you cultivate awareness to turn emotion into information. When these integrate, the roller coaster stops. You step onto steady ground. The market moves, but you remain unmoved. Calm, clear, focused, consistent. This is the path. Not easy, but simple. Not fast, but worth it. Not glamorous, but transformative. The emotional roller coaster of trading is optional. You can get off. The question is, will you? Because the moment you step off, the real journey begins. If you found this valuable and you're ready to build emotional consistency in your trading journey, make sure to subscribe, like this video, and share it with someone who needs to hear this. Comment below what part hit you the hardest, and I'll see you in the next video.